Banks don't treat everyone the same. Most people think a bank is just a place to store money. The same building, the same logo, the same app, the same customer service number. So naturally, most people assume everyone gets treated the same. But they don't. The way a bank treats you depends almost entirely on one thing: your financial profile. As your income, savings, and assets grow, the products you qualify for change, the service improves, problems get solved faster, fees disappear, opportunities appear that most people never even know exist. It's almost like climbing invisible levels in a game. Today, we're going through those 8 levels, from being overdrawn to becoming a private banking client, and seeing exactly how your experience changes at each stage. Let's start at the bottom. Level 1, overdraft and negative balance. Your checking account falls below zero. Maybe it's only a few dollars, maybe it's a few hundred. Either way, the moment your balance turns negative, everything changes. An overdraft fee appears. If multiple payments go through while your account is overdrawn, those fees can stack up quickly, making an already difficult situation even worse. It's a frustrating cycle. If you had enough money, you wouldn't have overdrafted. But because you don't, the system charges you even more. Imagine stopping for gas on your way home. You swipe your debit card, declined. You try again, still declined. Cars begin lining up behind you while you're standing there wondering whether your paycheck has arrived or if a bill cleared before you expected. That's what financial stress usually looks like. Not dramatic, not cinematic, just everyday moments becoming unexpectedly stressful. Many banks offer overdraft protection, which sounds helpful at first. Instead of declining your purchase, the bank covers the payment, then charges you a fee for doing it. For some people, avoiding the embarrassment of a declined card ends up costing another $35. Over the years, some banks have reduced or removed overdraft fees. Many still rely on them, and the people paying those fees are often the customers already struggling the most. The bank doesn't know your paycheck was delayed. It doesn't know you forgot about a subscription renewal. It doesn't know why your account is negative. It simply sees one thing: a balance below zero. At this level, you're not receiving financial advice or better opportunities. The system is simply recovering its money. Level 2, low balance. Eventually, you recover. Your account is positive again. Maybe you have a few $100s saved, enough to stay above zero, but not enough to feel financially comfortable. This is where a different set of challenges begins. Instead of overdraft fees, you start noticing maintenance fees. Every month, the bank withdraws money simply because your balance didn't meet its minimum requirement. If you already had thousands sitting in your account, those fees would disappear. But because you don't, you pay for the privilege of keeping your money there. Your savings account doesn't offer much help either. The interest earned is so small it's barely noticeable, while banks lend that same money at much higher interest rates. That's how banking works. The difference between what banks pay you and what they earn from lending creates profit. When you apply for your first credit card, you're often offered a secured card instead. That means you provide your own money as collateral before the bank is willing to extend credit. It's not exciting. But for many people, it's the first real step toward building a credit history. The service itself isn't bad. The app works. Customer support answers your questions. But everything feels standardized. If you have a problem, you wait your turn. The representative follows a script. Simple issues are resolved. More complicated ones are passed to another department. No one knows your name. No one is managing your financial future. You're simply another customer using basic banking services. And that's the biggest lesson of Level 2. The bank hasn't become more generous or less generous. You're simply experiencing the level of service designed for customers with limited balances. As your financial life improves, that experience begins to change. And that's exactly what happens in the next level. Level 3, stable income. This is where the relationship starts to shift. Not because you've become wealthy, but because you've become predictable. You land a better job, get a promotion, or simply start receiving a steady paycheck every 2 weeks. The bank notices. Not through a phone call, not because someone is reviewing your account. Its systems simply recognize that your income is consistent. To the bank, consistent income means lower risk, and lower risk opens new doors. The credit card offers begin to arrive. Instead of secured cards, you're now eligible for traditional credit cards with higher limits. The interest rates are still relatively high, but for the first time, the bank is willing to lend you money without asking for collateral. Let's say your car suddenly breaks down. You apply for a personal loan. A few years ago, you probably would have been denied. Now you're approved. The interest rate isn't perfect, but the important part is that the system finally works in your favor. Another small but meaningful change happens too. Many banks waive monthly account fees once your paycheck is directly deposited into your account. It may only save you a few dollars each month, but it signals something bigger. You're no longer paying the bank just to keep your account open. From this point on, you're becoming a customer the bank actually wants to keep. Not because they know you personally, but because your account has become profitable. Your spending, borrowing, and growing balance now generate revenue. And for the first time, you're treated like someone worth keeping around. Level 4, growing savings. Now imagine several years have passed. You stayed consistent. You kept saving. You invested regularly. Nothing flashy, just smart financial habits repeated over time. Your savings have grown. Your investments continue increasing. And one thing becomes obvious. Your financial profile looks completely different than it did a few years ago. The bank notices again. This time, it doesn't wait for you to ask. Your credit limit increases automatically. Loan offers improve. When it's time to finance a car or borrow money, you're offered noticeably lower interest rates. Not because the bank likes you more, because you've proven you're a reliable borrower. And in banking, lower risk almost always means lower borrowing costs. That creates a powerful advantage. Paying less interest means keeping more of your income. Keeping more income means investing more. And investing more helps your wealth grow even faster. This is where the financial system slowly starts working with you instead of against you. The changes aren't dramatic, they're subtle. A better loan rate here, a higher credit limit there, an easier approval process. Individually, they seem small. Over decades, they become enormous. By now, you're no longer just another account. You're becoming a valuable customer. If you ever considered moving your money to another bank, there's a good chance they'd try to keep you with better offers or improved terms. It's still a business relationship, but unlike the earlier levels, you finally have something valuable in finance: leverage. And as your wealth continues to grow, so does your importance to the bank. Level 5, high savings and growing assets. By this point, you've built something most people never achieve. Not overnight, not through luck, but through years of disciplined financial decisions. Your savings have grown. Your investment portfolio is expanding. Maybe you've even built a healthy retirement account. You're not rich, but to a retail bank, you're becoming a highly valuable customer. And for the first time, you begin to notice the difference. When you call customer service, you're no longer stuck on hold forever. The person who answers has more authority. They can waive fees, approve exceptions, and solve problems much faster than before. Some banks even assign you a dedicated banker, someone who understands your financial profile and becomes your primary point of contact. It's a more personal experience. Not because the bank suddenly cares about you as an individual, but because customers with growing assets are worth retaining. You'll also start receiving offers you never saw before: premium credit cards, mortgage pre-approvals, investment services, better rewards. The bank is no longer thinking only about the money you have today. It's thinking about the wealth you may have 10 years from now. At this level, you've become more than just another account. You've become someone the bank wants to keep. Level 6, high net worth. As your investable assets approach somewhere between $500,000 and $1 million, another shift happens. The bank stops acting like a place you visit. Instead, it becomes a financial partner. This is where wealth management begins: investment advice, retirement planning, tax strategies, estate planning. Everything becomes part of one larger financial plan. The conversations also become very different. Instead of asking whether you'd like another credit card, your advisor starts asking about your long-term goals. When do you want to retire? How much risk are you comfortable taking? What kind of future are you trying to build for your family? You're no longer discussing transactions, you're discussing strategy. Borrowing money also becomes easier. Loan approvals move faster, interest rates improve, and when problems happen, they're often resolved with a single phone call. The person helping you usually has the authority to make decisions immediately. No endless transfers, no repeating your story to multiple departments. The experience feels smoother because, from the bank's perspective, your relationship has become extremely valuable. At this point, you're no longer just another customer. You're an important client. And that's a completely different position than where this journey began. The same bank, the same logo, but an entirely different experience. Because as your financial value grows, the system quietly begins working in your favor. Level 7, very high net worth. Now your wealth has reached another level. Your investable assets are measured in millions. At this point, the bank stops offering the same products everyone else sees. Instead, you're introduced to opportunities that rarely appear in advertisements or on a bank's website. Better lending terms, exclusive investment opportunities, specialized financial services. The bank knows customers like you have options. So instead of simply serving your money, it begins competing for it. Take a mortgage, for example. Someone with your financial profile may qualify for a significantly lower interest rate than the average borrower. Not because different rules apply, but because you're considered a much safer client. Over the life of a large loan, even a small difference in interest rates can save tens of thousands of dollars. Your advisory team also becomes more specialized. Rather than working with one general banker, you may have professionals handling different parts of your financial life. One focuses on investments, another helps with taxes. Another specializes in trusts and estate planning. Together, they build a long-term strategy designed not just to grow your wealth, but to preserve it. At this stage, banking becomes far more flexible. Fee waivers, faster approvals, personalized solutions. The policies haven't changed, but the bank is far more willing to use its flexibility to keep an important client, because your relationship is now worth protecting. Level 8, ultra wealthy. Then comes the highest level, private banking. This isn't simply better customer service, it's an entirely different experience. Think about commercial air travel. Flying first class is comfortable. Flying on a private jet is something completely different. That's the difference between retail banking and private banking. Instead of dealing with a rotating list of representatives, you have a dedicated private banker. Someone responsible for only a small number of clients. They understand your goals, your family, your businesses, your long-term plans. More importantly, they have direct access to decision makers inside the institution. At this level, many financial solutions become customized. Loan terms can be negotiated. Complex transactions move much faster. Problems receive immediate attention because experienced teams are assigned to your relationship. That doesn't mean wealthy clients receive special treatment outside the law. They don't. Banks still follow the same regulations. What changes is the amount of flexibility they're willing to use within those rules. Fees are often waived. Exceptions are approved more quickly. Requests receive priority. Every legal advantage available is used to maintain an important relationship. Compare that to where this journey started. At level 1, everything was automated, rigid, impersonal. By level 8, everything is personal. People know your name. They understand your financial goals. And instead of searching for reasons to decline a request, they're looking for ways to make it work. Conclusion. So what does all of this really tell us? Most people believe banks treat every customer the same. In reality, they don't. The building is the same, the logo is the same, even the mobile app is the same. But your financial profile quietly determines almost every part of your banking experience. As your income grows, your options grow. As your savings increase, the service improves. As your assets expand, the system begins working in your favor instead of against you. The biggest lesson isn't that banks reward wealthy people. It's that they reward lower risk. The more financially stable you become, the more opportunities become available. And that's why building wealth isn't just about having a larger bank balance. It's about gaining access to better financial tools, lower borrowing costs, faster service, and opportunities that simply aren't available at the lower levels. In the end, the bank itself never really changes. Your position inside its system does.